All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. It is time to get our analysis going. So let's start off with the euro dollar. All right, uh, so let's talk about a few things. So first of all, the euro this week pivoted off the 618 retracement. If you read, the blog that I posted earlier this week, you already knew that I was, and plus if you were here, obviously, you know that I've been establishing a position here in the euro on the long side as we, retested the broken trend line. We hit the 618, big confluence of support down here, yada, yada, yada. Okay, so now here we are. The euro dollar has broken some pretty key levels, and this is what I feel is most important. So yesterday, we took out the 109.10. Okay, that level was taken out. And what I was most surprised with is we took out the 109.50. Now, as we were, probing up here, I took a little bit of profits off the table as we were probing this 109, like, 30 or 40, 30 level. And then, after realizing that the euro was holding up so well, I added back to my euro long that I took off. So, my cost average is 108.83, and I'm going to hold it through NFP. Now, I understand the risk that I can give back all of these gains. So that's, but that's the risk I'm willing to take as long as, the gold doesn't fall apart. As long as it's not like a 300,000 print. I even if it's a 220 print, the euro might come down and probe back some of the support. But, I don't mind being long the euro at this price. Okay. Now, one of the things that we've noticed here is this channel. Okay, this channel is pretty significant. Whether you were doing it, you could do it like this, like that, like that. You'll notice that we have a nice little channel that we've been following, and it's now broken out. We broke out of the channel, we came down and we're supported by the channel, and we're holding up very well. So what that means is the overnight low is going to be extremely important, okay, for anybody who's long. That would be me and anybody else who's long with me. Okay, so 109.25, extremely strong support, or extremely important support today for longs. 1.0925, okay, important. Now, question is resistance. Okay, so where are we going to go? All right, and you'll notice here that we have this fib that goes from the highs that when we peaked at the 113.70 level, okay, and the lows that we hit at 108.25. The 38% retracement comes in at 110.35. Now, Paul said, and I agree with him, if you're an intraday trader and you're like, listen, I don't want to hold any positions over the weekend, if we get a wow, hold on, hold the fort, hold the fort, hold the fort. Lorne, I just saw a comment come in from Lorne. I'm not going to read his whole last name. You guys don't need to know it. Lauren G. out of Toronto is listening in. He goes, good morning, Blake. Hope all is well. If you don't mind listening in for some much needed wisdom. Holy cow, Lauren. It's good to hear from you. Lauren used to be in our chat room for several years. He is a previous bank trader, currency bank trader. He was trading independently for a few years, sitting in our chat room for a few years, and unfortunately he left us to go back to trading at a bank. So good to have you back, Lauren. Maybe you took a Friday off away from the desk. It's nice to have you back. All right. Good to hear from you, man. And he said, thanks. All right, cool. All the guys and gals in the chat room that probably remember you, like, Ron and, probably maybe even Jared and Greg might even remember. I know Ziggy does, and DK Wood and all those guys. Probably will say hi to you, Lauren. Anyway, hope all's well, bud. Anyway, and he says, for sure, big hello to the gang. Awesome. Hey, anyway, okay, let's go back to the euro. So we're back in the euro dollar. Here we are. again, I'm gonna tell you that I think that the 109 and a quarter is going to be big support. Resistance now is at 110.35. Okay, that is the 38% retracement. If you guys are looking for a place to take profits, and if it is a weak number and gold rallies, and you're like, okay, I don't want to hold positions over the weekend, and this is probably a decent place to take profits. Okay, you can see that the hourly, and this makes sense, especially ahead of the NFP. You see the hourly candles. We're already seeing relative strength diverging. We got a little overbought yesterday. You know, we're divergent, so that's what stalls us. But relative strength is about neutral again. We're at 60, so get us down towards 60 in the 50s. We're neutral again. That allows us to start rallying. So once you get back to neutral, if the euro is just sitting here, we get a weak number, the euro is going to rally above 110, and you're going to see relative strength take off again. That's how relative strength will, when you're looking at relative strength, when it starts to diverge, okay, it tells you that you're overbought. Then it gets back to neutral, and then it'll start rallying again in relative strength as price starts hitting new highs. And that's how you work off overbought conditions, and that's what right now the euro dollar had to work off some overbought conditions from the last 24 hours. From the last 24 hours. So we're working off some of those overbought conditions. So that completely makes sense to me. All right, now resistance, like I said, is going to be 110.35. Should we get up there? Probably not a bad place to take profits if you're long. We are in a neutral range bias, and have been, for a while. I mean, if you look at the daily charts, we're definitely in a range environment at the moment. All right, let's take a look at the pound. All right, so here's the cable coming up. Pound dollar extremely strong. Like I said, I sold it 100 pips ago. I took profits 100 pips ago when we were nudging up against this previous support. We have rallied almost to the 50% retracement. That 50% retracement comes up to 142.50. Now, this is going to be really critical resistance on the way up, because you can see how big of support it was on the way down. You can see it was like a shelf of support, and then we got that Sunday gap, right? It was a Friday Sunday gap. Then we gapped and crapped, right? So once we broke through that 142.50, it was like off to the races. That's going to be a real tough resistance on the way up. Now, also keep in mind that we do have a gap to fill. That gap comes in at 144. I don't think we're going to get there today, but that is, if you're long the pound and you're looking for a target going into next week, I think this is a very doable target, especially if the dollar weakens today. I think that's a very doable target. That gap's going to try to get filled at some point. Okay. Not very many gaps in the market that I've ever seen, probably like 2 in my last 20 years of trading, 20 plus years of trading. There's only like 2 gaps I've ever seen that have never been filled. It's a very rare occurrence. Most gaps get filled eventually. So, this gap is no exception. All right. So anyway, we have right now 142.50 is going to be major resistance for today. If you guys are looking for places to take profits, probably not a bad place. I mean, you might have an hourly flag pattern here. It's a little long in the tooth as far as the flag goes, but it's non-farm payroll, so. That could take us a little higher, I guess, but you can see we're just stair-stepping our way higher. Yeah, so any move up to 142.50, probably not a bad place to take profits. I'm assuming 142.50 would be tested if the euro makes it to 110.35, so 142.50. We are out of our bearish range. We are now in a range environment in the cable. Support, okay, support will be key or critical right here. So I mean, this is where support is really most important, but that's really far away from where we're at today. So support for today is probably 141. I think if you break through this 141 level, anybody who's bullish the cable, who's been playing the squeeze, they're probably going to be pretty disappointed that we broke back below 141. But if you've noticed this move all week, again, I'm going to reiterate the entire week here. We had weak manufacturing PMIs on Tuesday, weak construction PMIs on Wednesday, weak services PMI yesterday, and the cable has been relentlessly squeezing. Think about all the people that's short right now. They're probably like, what the, my God, they're sticking this trade right up my rear end. I just want to get out. So, dips to 141 are probably going to be fairly well supported, but if we break through 141, that's going to, that's probably going to stop out some near-term people that have been playing the long side of the cable just for a squeeze. So 141 will be support for today. All right, let's go over into the Swissy. So the Swissy, I just so you know, I just sold my Euro Swiss. I bought the Euro Swiss earlier this week. I sold it for 55 pips. For those of you that were buying it with me down here, I can't remember who it was that brought it to my attention that we came down and we were retesting the support. We had this ABCD. I bought it like on Tuesday here. I just sold it this morning for like 50 some odd pips. I just want to let you all know that because I know some of you were long the Euro Swiss. The dollar Swiss, though, this currency pair is extremely choppy. And you guys know I'm not a buyer at these levels. I love the dollar Swiss. I really do. I really think the dollar Swiss is a currency that I want to own longer term. I really want to buy it at 96, 97 cents again, like we did, a couple of weeks ago when we bought it here. I want to buy it on a pullback, to these trend lines somewhere down here, the 96, 97 cent level. It would actually be like right over here. Okay, somewhere down here. If we can get it, but I'm not interested in buying it right now. Okay, I'm just not. I think there's a real big migrant issue that is plaguing Europe. If you guys live in Europe, you guys see it on TV every single day. Takis was just in our chat room this morning. He's in Athens, Greece. He was talking about really big meetings that are happening on Monday. The billions of dollars this is going to cost the eurozone. With all the the migration from Syria, through the Turkish borders. I forget what Takis was talking about. The Schengen Treaty. If you don't impose it, it could be 1.5 trillion for the next 10 years to the eurozone. There's a lot. It's a big worry. And if the eurozone continues to, this is going to be mainstream news, and it's really going to start to, come back, to the forefront, in my opinion. Traders may look for some safety here in the Swiss franc, so I'm a little nervous being on the short side of the Swiss at the moment. Well, and technically there's no real reason to be trading it. Our resistance right now is at 99.50. Support's going to be at 98.50. We're at 99 and a quarter. I'm really not interested in trading the Swissy right now. There's just there's no real reason. We are holding the 38% retracement, so that's important. I guess you can say that this 99 cent level is supporting. 99.50 is resistance right now currently. It's the tight range. We might get a break today, on a strong number. We might, break higher towards this resistance, weak number. We're going to break towards this 50% retracement, but it's not something that I'm even willing to trade. I will write down 99 cent, 99.50, but I'm very disenchanted with the dollar Swiss at the moment. Okay, there's no reason at this point in time for me, or even you. Of course you can do whatever you want to, but I don't think there's any reason for us to stick our neck out with the Swissy. It's lack of direction here. Okay, let's go into the yen. So I will hold my dollar yen short through today's numbers. Okay, I am short the dollar yen, and my cost average is 113.76, and I am not ignorant to the fact that we can rally to 115. Strong number today. We're probably going to go back and re-challenge this 114.50. All right, now that's, I think, resistance for today, because if it's a good number, like let's say we post a 225, let's say we 225, unemployment stays at 4.9%, wage growth actually ticks higher than expectations to 0.3% versus 0.2% that average hourly earnings is expected. So let's say it comes in better than expected. Shoot, we'll be sitting right back here at 114.50. I'm not like I said, I'm not ignoring the fact that that can happen. It can happen. I've lived through it already. I'm not worried too much about it. Now, the fact of the matter is if we break through this here, let me get rid of this for a second, because this is doable, this ABCD. So, but I'm going to remove that for now just to declutter the charts. Okay. Let me remove this for a second. So we have this upsloping trend line comes into play. That means that this low is extremely important right now, extremely important to the market. That's 113.25. So 113.25. If 113.25 gives way, we are probably going to buckle, and we'll be trading down towards the 112 level next week. That would come, and that would come especially if gold confirms a breakout today. Because remember, gold and the yen have a very tight correlation. Okay, we have a very tight correlation between gold and the yen. So if gold rallies, the yen's going to rally too, which means that we're going to plow through this support. So I'm going to write down 113.25 as support, 113.25. Some people said that that the webinar went silent. Can you guys hear? Test, test, test. Can you guys hear me all right? Testing, test. Okay, Nitish, you can hear. A couple people reported that there was that the sound went out. That's interesting. Okay, everybody else can hear. Thanks guys. All right, I appreciate it. Huh, that's strange. Okay. Joe said, "Yes, you never stop talking." Yeah, that's some people had just. I've seen a couple people report that, "Hey, Blake, I lost sound for a moment." I don't understand what the issue is, but all right, most of you are okay. I just want to make sure it wasn't a widespread issue. All right, going back to our analysis here. So we got 113.25 and 114.50. So 114.50, and we are. You guys know this. As long as we remain below 115.50, 116, we are in a bearish trend. We are in a longer-term head and shoulder pattern. Dun, 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 dun. We're currently in process. So as long as we stay below this, this yellow box that you see here, it's bearish. Okay, that's just like the longer-term view. All right, but for today, here's the 4-hour chart. Again, key support comes in at 113.25, resistance is at 114.50. Okay, and we have this upsloping trend line that try not to ignore that for right now. Okay, that was the yen Canadian. Okay, so here's the CAD. CAD's been holding up surprisingly well. I don't know what to do with the Canadian, frankly. You guys know that as long as it's below this 136, now it's this is an upsloping trend line, but as long as we're below this trend line, it's bearish. But we've been holding support pretty well. This is 161% extension of the last move up at the 134. We've been as low as like 133.70 right through here. So, but we can't get a leg up either. So just little rallies here are just being stuffed. Little rallies up to the 135 level are just getting stuffed, and supports at 133.70. And if we break the 133.70, that should expose that 132 move, which you guys know I am a buyer down here. I'm actually I'm thinking maybe even the next week, if we have a weak number today, we get down to this like 132 over the course of the next couple of days. I'm a buyer down here. I am going to start buying the dollar Canadian, but that's not today. That's, maybe next week if we get a weak dollar response today. We also have Canadian jobs report next Friday. Okay, that's something else to consider. Excuse me. 135, 133.70, 133.70, 135, and oops, this is bearish. Sorry, we're in a bearish trend right now. All right, let's go over to the Kiwi. Kiwi is a freaking nightmare walking, psychopath talking currency pair. I mean, we had a massive false breakout. Was it last week? I guess it was last week or 2 weeks ago. So we had this, oh, it was Thursday. Thursday we thought we were going to break out. Friday we get swatted down. We don't break lower. Now we're trying to break higher again. We got every precious metal that's starting to rally, like gold, silver, copper, supporting the Kiwi. But man, this Kiwi is a disaster. I mean, it is a disaster trade. Like, I mean, talk about flip-flopping all over the place. But you can't ignore the fact that the Aussie is ripping right now. Okay. You can't ignore the fact that the Aussie is strong. Okay, the Aussie's strong. The Kiwi's, trying to rip higher too. I mean, and as long as the Aussie continues higher, the Kiwi's probably gonna, follow suit. It may not follow at the rate that the Aussie is going up, and that's why the Aussie New Zealand continues to climb. But the Aussie will drag the Kiwi, by its hair, by its heels, by its ankles. It'll drag it higher if the Aussie continues higher. All right, so resistance right now, this fib right here, you're basically at the 786. So the high 67.73. I mean we're right up against resistance. So I have to mark it, but it's there, right? 67.75 basically. Sorry, I don't mean to yawn on you guys. It's Friday. You guys know I always get tired on Fridays. It's the 5.5 hours of sleep every night that kills me by the end of the week. I mean, we're climbing right into resistance. Relative strength is starting to diverge. It's tough, man. It's like I don't know what to do with the Kiwi here. I really don't. So I guess, and this is just, this is tough analysis. It's like, you don't want to short it because it, obviously you got the Aussie that continues to climb, you got gold that continues to climb, you got copper that's climbing. You don't want to short the stupid thing, but at the same time it's just struggling up here, up against resistance. So it's like, think about the false breakout last time we were up here. You realize, do you really want to get long just in case that happens again? So it's a tough call, and I don't think it's an easy one. Today will confirm us going from range environment to a bullish trend. Okay, today will confirm if we break out. All right, now support comes down at 67.15, 67.10 ish. I'm gonna write that down. 67.10. It's not great support. It's just support. Okay, Aussie. Crap. Okay, so when we come back from our break, we'll do the Aussie dollar index. Obviously, we have the peso. We have Nordic currencies. Don't go anywhere. I'll be back in just a few minutes. Thanks everybody for being here. TGIF, people. All right, traders. This is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So we're going to finish off our analysis really quick. So let's go over to the Aussie. As you guys know, Now the Aussie is in breakout territory, and I'm going to shift it today to a bullish trend. Now, I want to also be clear here that we can dip right back into the range today. All right, we can get a false breakout today. Today can be a false breakout in the Aussie, but as you can see, the Aussie dollar is climbing, in breakout territory right now. All right, and it's bullish. And as long as we continue to hold above 73.50, in my opinion, today, it's bullish. If we have a weak, jobs number and we, climb above 74 cents, it's bullish. If we have a strong jobs report, if we have a strong jobs report and we break back below 73.50, it will be a false breakout. We will have to go turn this back into range next week. But for right now, it's trying to make a bullish break. It's very, very strong. I mean, I can't, I can't, you can't ignore the fact that it is just absolutely on a tear right now. And you look at copper. Copper was at, 215 earlier this week. It's at 224. It's already ripped up 5% just this week. All right, it's on a tear. All right, so the Aussie is, following suit. Now, resistance, we got to figure out where that is, because, these highs over here, this is 74.38. I think that's going to be, resistance for right now. That'll probably be resistance for today, right through here. Okay, those highs right there. Okay. 74.38. You can think this is squeezing. I mean, this high, we're at this high right now, which is 73.85. We're at 73.82. I mean, we're at this resistance right now. Next resistance is 74.35. Okay. 0.7435, and that is a high from, Dan. I mean, you're talking last summer. We're almost at 52-week highs in the Aussie dollar. How crazy is that? Oh no, I guess not. No, that would be way the hell up here. Forget I just said that. But we're at pretty key resistance. I mean, you're talking about 6, 7, 8 month highs. All right, support for today. Where is support? And I'm not long the Aussie dollar. I'm not. I wish I was. I mean, I should be. I don't know why I didn't buy it right here on this breakout. I didn't. Well, I'll tell you why. Because we never dipped. I guess that would give you the good reason, is it never really dipped. But man, it's relentless, right? Like if you're on the short side of the Aussie, if you're on the short side of the Aussie dollar, and I'm sorry if any of you at home are, but if you're on the short side of the Aussie dollar, how horrible do you feel right now? I mean, seriously. You're going, oh my God, this thing is just punishing me. I mean, just like, I can just see it right now. Please stop. Please stop. Please stop going up. I mean, it's relentless. I mean, look at the breakout, and it just break out and does not stop. Crazy, huh? All right. So where are dips going to be supported to? I mean, you go over to the hourlies, and I guess, somewhere around here. 73, that's 73.30, 73.40. Maybe down here, because this is, a little breakout point here on this wedge, that launched, and you can see we had a retest on an hourly, so that comes in at 73.25. I would say that's probably support today, not great support, but you have to think the people that are short right now, where are they trying to get out? If you're short the Aussie dollar, where are you trying to get out? You're like, ouch, this hurts. Please stop. Please stop going up. Okay, on any dip now, I got to get out. Because if like, let's say you shorted the breakout, because there was somebody here yesterday, or no, 2 days ago, that asked me. I'm not going to point. I know exactly who it is, and I'm not going to point her out. Somebody said, "Hey Blake, I'm looking to short the Aussie dollar." I'm like, "Really? We're breaking out. You have the copper's breaking higher. You want to short the Aussie. This is like on Wednesday, right? 72 60, 72.70. Imagine if you're short there. You're short at 72.70, and right now we're at 73.80. You know, I mean, I'm sure you're in panic mode at the moment, and you're trying to figure out where in the hell you're going to try to get out of this thing. You know, oh my God, am I going to get, if it goes above 74 cents, do I get stopped out? If we, heaven forbid, if we can just get a dip down here to 73 and a quarter, I'll just take my lumps if we get down there. So think about it on, you know, who's on the other side of that trade, and how do they feel right now? You know, think about that. Excuse me. So anyway, there's the Aussie bullish dollar index. Okay, so here's the dollar. Let's go into the 4-hour. Popped out of that channel that we talked about yesterday. You know, this is just the inverse of the euro. It's the same thing, right? So that means that 79.85 is resistance. This is a 4-hour chart, but you can see just a retest of this. It's going to be really important. 97.85 is resistance now. We are in a range. Support, well, right now is 97.44. I mean, at 45. I know it's right here, but let me try something really quick. Let's get rid of this. Okay, and let's do this. That was not my birds. They're still sleeping. It's dark outside. Okay, 38% retracement comes in right there. I'm going to write it down at 97 and a quarter just because of the 38% retracement. This support's too close. That's the opposite of, you know, if we get to 97 and a quarter in the dollar index, that means the euro dollar hit 110.35 is basically the equivalent. It's because it's the exact opposite chart of the euro right now. Okay, so 97 and a quarter. It's probably not a bad place to take profits if you're short the dollar. Okay. Let's go over to the peso. The peso is still being capped by 18. We haven't, you know, been able to scale back above 18. Which if you're short, that's great news. Just be careful because if the stock market goes risk off, that's when we break through 18. So 18, 1770, we had been writing down 1775, right? Or 1778, 1777, I think. Okay. So we'll just write down that. It's a really tight range right now, peso. I want to be short the dollar Mexican peso. I just don't want to be short here. I want to be short at 1850, but most of you know that. 17.7077, and then resistance is at 18. And this is key resistance because if we break above that, then you know that the market's gone risk off. Just so you know. Okay. Nordic currencies. Here's the Norwegian krona. Man, look at that. Breakdown. We couldn't even rally back. I mean, we were here, and I said, if we can get a rally back to that previous support, that'd be great. You see, look at the lift. Just, I don't know what to do with it here, though. I mean, I don't. Hold on. Let me get rid of this really quick. Let's do this. See, this doesn't even match up with any fibs down here either. I don't think there's anything to do here. It would have been a great short if it could rally back to here, but it just didn't. Never made it. Let's take a look at the Swedish krona. This is choppy. how choppy this is. You know, we couldn't sustain a breakout here in the U.S. dollar Swedish krona even after that week. I think it was weak. I want to say it was weak manufacturing numbers, but it was whatever the weak data was from last week. We just relinquished all of those gains. Um, you know, Swedish krona has gone, gotten pretty strong alongside the euro. So just a false breakout. Real choppy markets here. Um, so I don't think there's a whole lot to do with the Nordic currencies at the moment. Really isn't at this moment. And they will develop in time. I mean, the Nordic currencies over the years have been some of my favorite currencies to trade. It's just right now they're just not doing a whole lot. Okay, here's your bias chart. You have your bias chart. It is now ready, and let me see if I can take some questions this morning. So, first question comes in from earlier. I'm not going to be able to answer every question today.